$63 million. That is what Zimbabwe just paid to join a bank most Zimbabweans have never heard of. On July 10th, 2026, in Shanghai, a board resolution made it official. Zimbabwe is now a boring member of the BRICS New Development Bank. Everyone is calling that a banking story. Personally, I think that's just half the story. You see, for 80 years, if a developing country needed money for a dam or a power station or a railway line, there were really only two doors you could knock on. That is the World Bank or the IMF. Both were built after World War II, both are headquartered in Washington, and both come with something attached to the money. That is conditions. Your austerity targets and currency policy dictated from outside. These are reforms often written by people who would never have to live with the consequences of their demands. And for a country like Zimbabwe, which is still working through its own arrears with those very institutions, that door has been narrow for a very long time. The New Development Bank is a different door. It was founded back in 2014 by Brazil, Russia, India, China, South Africa. And as I said before, it's based in Shanghai. It was built to finance infrastructure in emerging economies without the West holding the pen on your domestic policy. The founders were not out there saying the World Bank should disappear. They were asking something simpler. Should the world's fastest growing economies keep relying only on institutions they didn't build? Or should they build some of their own too? This bank is their answer. It's not a replacement for the old system. It's just another pillar standing next to it. Now, Zimbabwe has put in $63 million to become a full borrowing member. That's not pocket change for a country like Zimbabwe. That is a solid investment. And that stake means a seat and a vote in how this thing actually gets run. Let me be clear on one thing though. Zimbabwe is now a member of the BRICS Bank. Full membership of the BRICS bloc is a completely different story with separate applications, and it is still pending. The two should not be conflated. You see, for decades, the global financial order ran through basically one center of gravity. That center isn't alone anymore. What we are watching with the banks like this one is part of a bigger shift towards a multipolar world. More centers of power mean more places to get capital, more room for a country like Zimbabwe to actually choose who it works with instead of just taking whatever is offered. And here is the principle sitting underneath all of this. Countries don't get powerful because they have money. They get powerful because they have choices. In international relations, dependence is weakness. Options are power. A country with two lenders negotiates completely different than a country with one. Not because it's richer, but because it can actually say no and mean it. This ties straight back to something we've already covered in my previous post, Vision 2030. Roads, power stations, rail corridors, industrial parks. The exact kind of projects a 7-year presidential term was designed to actually finish. And now they have got a second, less conditional source of money standing behind them. I am not going to pretend this development fixes everything. The BRICS NDB is still small when compared to the World Bank. And it has approved far fewer loans more slowly than its own founders once promised. Zimbabwe still has real work to do in re-engaging with Western lenders too. This doesn't displace that process. It just runs alongside it. Diversifying isn't weakness. It's what every serious economy does with its options. And this month, Zimbabwe just added one it didn't have before. This has been the Goto Brief. Thank you.